Attention California qualified investors. You are about to discover one of Warren Buffett's investing secrets that can earn you potential double-digit returns safely and legally. It's a conservative, high-quality credit risk investment called life settlements. A recent independent study at the Wharton School of Business showed the average returns for life settlements is between 9 and 13%. What is a life settlement? A life settlement is simply the sale of an unwanted or unneeded life insurance policy by a senior citizen to a third party for an amount which is 3 to 4 times greater than the policy cash surrender value, but less than the face amount of the policy. Let me give you an example. Let's say Mr. Smith is 80 years old and owns a $1 million life insurance policy. For whatever reason, his circumstances have changed. He'd like to stop paying premiums and cash out. Insurance companies love people like Mr. Smith when they terminate their policies because they can now pay Mr. Smith a mere $50,000 and be off the hook for the $1 million owed as the death benefit. In fact, more than 90% of life insurance policies lapse without the insurance company ever having to pay the benefit. The life settlement industry offers Mr. Smith another option. Rather than take the measly $50,000 that the insurance company is offering, Mr. Smith can now sell his policy on the secondary market for $200,000 and receive cash today. That's 4 times, 400% more money to help him live out his retirement in dignity. A recent study at the London School of Economics suggests that seniors get 4 times more money selling their policies on the secondary market, life settlements, than they would by selling their policies back to the insurance companies. Who do you think owns the policies now? Investors own the policy. When the policy matures, the investors receive the $1 million benefit. It's a financial asset, guaranteed by an A-rated multi-billion-dollar life insurance agency, and the return is fixed. You always know up front what you will be making. In the example, the investors pay $200,000 to collect $1 million once the policy matures. The life settlement industry is a multi-billion-dollar industry. The value in life settlements are unaffected by global economic trends, the equities markets, real estate, the political climate, or interest rate fluctuations. Life settlements remain unchanged no matter what happens in the global economy. Let me explain the process. A person over 65 sells their unneeded or unwanted life insurance policy to a third party. The life insurance policy is analyzed to ensure it is investment grade. A third-party medical firm prepares a life expectancy report. They employ insurance actuaries who analyze the policyholder's current medical health along with their past medical history. The data is entered into sophisticated mortality software to create a life expectancy report. This is a science. They have a 93% accuracy rate. Policies with insured life expectancies of 2 to 7 years are accepted. All policies must pass the contestability period. What does this mean for you? Through California legislation, qualified investors can now purchase fractional interest in several permanent life insurance policies at one time. They are packaged into an investment opportunity. All policies are issued by some of America's most stable life insurance companies with A ratings or better, as determined by the top rating agencies. The investor receives a contract and certificate for the investment, which shows ownership in each of the policies they have invested in. An investor's funds are held in escrow with an intermediary company, a trust. A separate company manages all premium payments for the policies, offering investors an additional layer of protection. When each life insurance policy matures, the investor immediately receives their proportional share of the life insurance policy benefit. Since policies mature at different times, the payout is laddered, similar to a bond portfolio. Life settlements are a tax-deferred, non-market-based asset class with potential double-digit returns. Life settlements are an excellent choice for investing qualified money, such as IRAs, 401ks, and pension funds. A qualified investor can invest up to 10% of their net worth in life settlements. Accredited investors can invest up to 15%. We are licensed by the California Department of Insurance, and our offering company is regulated by the California Department of Corporations Securities Division. Fortify your portfolio with a conservative investment in life settlements and earn potential double-digit returns.